Hey guys, it's Willie. Today I want to talk about Meta Platforms stock, also known as Facebook stock. Currently it's trading at about 212, 213. Had this really big drop right in here. Basically lost $100 a share over a period of one day. That's big. But I think Facebook is a really good value. I want to jump over to the spreadsheet and see how much of a value it is. Alright, so now that we're in the spreadsheet, I want to start with money coming into the company, starting with revenue. You're looking at really good, not slow, but you're looking at steady growth. 37% a year. Net income, much the same. You see a really sort of weird year in here, but 45% a year. Free cash flow, seeing growth there too, 38%. Shares outstanding are going up. I don't really like that idea. As you can see right in here, they really take off, and then you start to see more of a coming down. So I hope that Facebook is going to continue this buying back of shares, especially because I think it's so cheap. So Facebook in the future, as long as they continue this, that's a check mark in my book for decreasing shares outstanding, which increases our share of the business as a on a percentage basis. Earnings per share, free cash flow per share, going up steadily, just like the net income and the free cash flow. And hopefully with this buying back shares, it's going to grow even faster. I pulled total assets in here just so you guys could see it if you wanted to. A dividend. Facebook does not pay a dividend. Usually when I look at a dividend, I'd like to see continual increases. You don't want to see any dividend cuts, stuff like that. It kind of helps gauge the ongoing health of the business. Total debt, I want to take a look at it next. So the debt really isn't too high, especially when you compare it to the cash. So we take the debt minus the cash, you get a net debt number. Those are negative, so it means that Facebook could pay off all their liabilities with the cash they've got sitting in the bank account. And as many great investors will note, it is really difficult to go bankrupt if you have no debt. It is really difficult to do that. So it's really safe that Facebook has essentially zero debt after their cash. On to return on invested capital, you're looking more recently between 15 and 20, about 20%, I'd say average. Over the past 10 years, it's averaged 14%. Still a really good rate. On to our metrics. The PEs and the free cash flow, price to free cash flows, look a bit high, but you'll see in a minute with the growth rate that I think Facebook is going to be doing, I think that'll be okay. Net debt, again, that's a negative number because they can just pay off all their debt with the cash on the balance sheet. They don't even need to touch their free cash flow. Revenue growth, earnings growth, and free cash flow growth over the past 5 years, really good double-digit numbers. We like to see that. Shares outstanding going down over the past 5 years, like to see that. Hopefully that will continue over time. Return on invested capital, you're looking at 19.3% average over the past 5 years. Really good for Facebook to do such a good job investing their capital. On to the growth rate forecast for Facebook. I was playing around with it. I think I'm going to change this over to a 10%. I think that's relatively conservative compared to this, monster revenue, net income, free cash flow growth rates that we've seen in the past. You're looking upward to 40% on those. So I think 10% for Facebook, even though it's a big company, I think it's doable. I mean, even if they've been able to grow so much here recently, I think it, should continue to grow. If not at 40%, I think they should still be able to do 10%. PE, I'm going to leave it at 15. So we get free cash flow estimate in 10 years of $318. You're looking at a net income forecast of $392.64. And I just realized how wildly off 2030 is from 10 years, because it is now 2022, people. Why did I not change that? I'll get it later. Anyway, price right now, $215, roughly. We got our two price targets, average them together, split the difference. $350, $550 in 10 years. So you're in at $215, you get these free cash flows, you're out at $355, you're getting a 12% return from a really safe company. Again, you're not worried about bankruptcy because essentially they have zero debt after their cash. And I think this growth rate is very doable. I think this PE, if they're going at 10%, it could be higher. I wouldn't argue that point. If we want to change it to more of the 15% I had previously, maybe adjust. Well, I'll leave the PE as 15. That's the market S&P 500 average, and Facebook is a really big company. 15% growth rate, you're looking at 18% return. I think Facebook is a really good company, really good growth prospects. We'll see how their shift into the metaverse works out. Hopefully they don't, screw this up. Hopefully not. But I think this, growth rate, I think the 10% number is very doable. But as always, do your own due diligence, run your own numbers, do your own math. But I think Facebook is worthy of more research to see if we want to add it into our portfolios, because you're looking at beating the market average over the long term of 10%. You're beating it at 12 or 18, depending on what numbers you believe. But anyway, I will end the video here, and I will catch you guys in the next one.